Hello fellow traders and investors, I'm L.A. Little, a Wall Street outsider, and welcome to my YouTube channel. It took me 20 years to create the Neoclassical technical analysis theory and to make me a successful trader, and I share that actionable knowledge here with you on a regular basis. Hello folks, and welcome to another trading day. What we're going to look at today, of course, is we're going to set the table first with what the indexes look like, and then from that we'll jump off into some ideas for trading. Now the main thing here, I've got the SPY up, is that what we have is a market that refuses to break. You got a swing point low here, one there. What does it do? It comes in, test them both, volume tails off, right, compared to both of them, less volume, flips around, sort of a doji, but basically a reversal bar. You had a doji here, indecision as it tried to come down, right? Now you get under it, back over it, less volume. This thing wants to bounce back up again today. And so that's the technical setup coming into the day. Where can it bounce? Well, actually, you kind of got this expanding wedge, if you will, that's been developing, right? So it can come all the way back up to here if it wants to. Realistically, you've got all these volume trails here and here, so I would think that when you get into this area, you're going to have the same problem you've had before, which is they're going to sell it. I don't even know if it'll get to that area. You've kind of got some areas right in here, right underneath these lows, just under 690 on the SPY. That's probably going to serve as resistance as well. So if it gets over here, it can get to there, and potentially can get up to the top of that wedge that it's been developing. But the bigger picture here is if it breaks, it's going to go to the 671 first, and then it's going to try to get down here to 650 area. So you got a lot more risk on the downside than you do on the upside. Once it trades back into any area up in this area, this section of the chart. So that's that one. Now the weakness, of course, is over in the Qs. So if we look at the Qs, this is where your big weakness has been, and as you can see here, this was a bearish retest region. You went back up, you came in, now you're going to try to come back up into this area and test it again. Now that would be the second test. That's more of a coin flip type test. The first one should regenerate lower, which it did. Next one, not quite as clear, right, if it's going to regenerate lower or not. So we'll have to see when it comes back in there what it wants to do. My take is that given this pattern, which is kind of an H, right, it's probably going to hold here and is going to eventually try to break down again. It's already broken this one. This is the next target down around 580. So that's your backdrop. Best case, you got a sideways type market. Worst case is potentially going to break to the downside. It could potentially break to the upside too. I mean, it's been consolidating, what, 5 months already, 4.5 months. So, I mean, there's enough consolidation to take it higher. The real risk here is if you break that swing point low, this one over here, that's going to take you down into here. That's the sweet buy. That's what you want to happen. We just have to, give it a chance to happen to pick up some stuff on the cheap. Now, I've been banging on Amazon as a potential trade. I had said that this was a good trade for a bounce, and they beat up software, they beat up Amazon, they beat up other infrastructure companies in general. Just look at your setup though. I've gone over this, I'll go over it one more time. This is the big volume blow off low, right? You try to bounce, test the top of that range, you get underneath it here. Then the next bar is a doji, right? So you get under it, back over it, less volume. Now you do it again. You get under it, back over, less volume. What is it doing? It's going to try and bounce back to this 212 area. Now, it can actually get up into the 220 area. That's the bearish retest regen over here. But first target is here. So if the general market gets a decent push, right, this thing can push all the way back to 220. if it doesn't, right, that's probably going to cap it again. And so realistically, you're shooting for about 210, 211. Your risk is almost nothing, right? And it's a good reward risk, especially if you bought it down in this area, as I suggested over the last couple times I've talked about it. Let's go to one more. Let's go to Microsoft. It's got almost the same setup, but it's not as clean. Microsoft is coming down to try and test this again. Now, I don't know if it's going to get there or not. You know, maybe it will. But again, you've got a fast, compressed, large downside, right? Gives you a bounce. You come back to test. That's normal, right? If it holds, if this area holds, this thing's going to shoot back up, and you can trade all the way back to about 442, which is the top of that. You'll have resistance here again, 22, but it could trade as high as 42. And that's assuming that the general market, you know, gets a decent bounce. The MAGS. So the MAGS are the large cap, a lot of them infrastructure stocks. They've been hammered as well. Here's that H pattern that breaks, right? This is coming back to do the bearish retest off of this one and that one. I would think right there is about where it's going to get to. So you got, you know, a decent bounce. That supports what I just talked about in both Microsoft and Amazon. Let's go to, actually not that one, let's go to CRML. This one did a little hammer reversal. Now, I don't know anything about this stock. I just picked it up on my reports where I'm looking for hammers, right? This one came into a bullish retest region, first test as of yesterday. Gets a little bit of a hammer, and is going to try and reverse back up. It could trade all the way back to this area here, potentially to that area. So about 12 to 1350 or so is reasonable. So you know, it's a good setup for a bounce. Very high short interest in that name. That could give you a nice push. And then again, high interest here. Here's YELP. What do we see? The same sort of thing we've been seeing elsewhere. Here's the undercut, a little Dragonfly Doji back to the top side, right? This can easily push back into you know, this area here. As a matter of fact, let's pull it up on the weekly, because there you've got a big push down, about 24. So you're pushing you know, roughly three back up on a $20 stock, 15%, right? That's a good trade. So the point here is that we're at a point where the market wants to bounce. You can go after these reversals for bounces, but remember, the big picture here is there's a lot of danger to the downside. So you don't want to get carried away, get in these things, think they're, you know, hold forever type trades. These are trades. They're not holds. So you get in them, you make your money, you move on. And we see if that bigger picture develops where we get that 10-15% push to the downside in the general markets, which is going to cause 20-30% down in some of these stocks again. That's where we're at. You have a great one, and I'll see you next time.